This conference will now be recorded.
All right, good evening, everybody. This is Greg Morton. It is Saturday, May 13th, 2023, and this is the weekend video update for Canslim Growth Stock Investors brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, this is for educational purposes only. Not recommending any stocks or securities to buy or sell. All investing has substantial risk of big losses. We want to learn first and only then invest. So today we will look at the impactor and current market review like we always do each weekend. We'll talk about some action plan thoughts currently as this chop fest meat grinder market continues. We will, after 2 weeks now, go back and look at what I called the dream team or the elite 8 when I set it up. And then this Tuesday, 3 days from now, is our next monthly online meeting at the Stockyard Meetup Group. I've got some really good stuff on the agenda, I think, so I will share that with you. So the M factor, as always, O'Neill and IBD stress that we should diagnose, we should interpret, but we should not predict. We look at 3 things in this order of ranking, order of priority, the action of leading stocks, and we're talking about strong Canslim growth stocks, fundamentally and technically. Even if we miss these, we still need to know who the leaders are, and we get clues on the M from watching them. Actions of stocks owned, still treading water year to date, and substantially reduced percent invested. And then we look at the market pulse, distribution day count, several things which I've incorporated into the coloring book, which is my tool to assist me in the diagnosis of the current market direction. So let's take a look at the action now. We're going to look at the index charts, coloring book, and the group teaching portfolio. So let's hop over to Market Smith. So this is the NASDAQ. Let's go to the daily chart. So this one actually, we have all 4 moving average lines in the correct order, and we have the index above it. So the index looks fine here, and that's the problem. The indexes look fine, but the growth stocks are not performing fine. We have very narrow leadership, very narrow breadth, mostly in the big cap tech names is what's leading now. When we look at the weekly chart, we do see tight trading, but it's also sort of wedging up as volume is coming down. We go to the S&P 500. You have the 10 and the 21 day are converging. These are still look like they're stacked in the correct order, and we're above or right at the moving average line. So this is the second most constructive looking index. NYSE, now we're looking worse, trying to hold the 50 day. The 10 has crossed over the 21 day, and these are heading down, and the RS line is just yuck. Dow, same thing, RS line is yuck, and trying to find support at the 50, but under the 10 and the 21 day. And then the small caps are just trashed. So we have the moving average lines totally upside down from where we want them to be. RS lines plunging. This just looks terrible. And the S&P 600 looks the worst. I think it has the most exposure to financials, which would be these smaller cap banks, which are really struggling. So sort of have divergence there. NASDAQ's good, others are weak, and the small cap look terrible. If we look at the group teaching portfolio, Google lost the data. Let's see if I can reload it. There we go, picked it up. So year to date, just flat, down 0.5%, so underperforming the NASDAQ, only 22.5% invested, and then that's split basically 58% on the long side and about 35%. Those don't add up, so I've got a math error somewhere, but I'll figure that out and fix it. But just sort of split, have our short positions, one long, nothing's a full position, and KVUE, which we will talk about Tuesday night in more detail, is just a pilot size position. And if we go over to the coloring book, so here is, we just have this divergence. The NASDAQ's green. First of all, the buy sell day count, we only have 6 buying days and 9 selling days in our 25-day window. MMTS is green on the NASDAQ, yellow on the S&P 500, and then red on the other 4. IBD went back to uptrend resumed, but the distribution count stays in place. So we have 4, 5, and 4 on the 3 indexes we track. Window of opportunity still open, but we're in a net trend of new lows exceeding new highs. So just a lot of divergence there, and we'll talk about what's been most important lately in just a minute. So let's go back over here. We looked at all of that. So bottom line, it's been a tough market. They either scare us out or they wear us out. COVID bear scared us out, and this bear is wear you out. This is a long bear market. This is, if you look at the charts, really kind of the uptrend ended in February 2021. The index is actually topped in November 2021. So either way you cut it, it's been 2.25 years or it's been 18 months. Long bear market, well beyond the 9-month average length of a bear market. So this one's tough. It's just this ongoing chop fest whipsaw situation with daily rotation sort of underneath the strong, calm surface water of the indexes. And that's what's making it hard. Current critical survival tools, I think 2 relatively new things are really helpful at this time. Our traditional tools don't seem to be working as well. The follow-through days haven't worked. Low distribution day count has not been real helpful. IBD market direction call, I don't think has been real helpful. The market school model is at full exposure plus, 100% plus, and we're in a power trend still. So there's just one of those times those aren't the best tools right now for helping us diagnose the market direction. The 2 that have worked, or seems to help us most right now, these have sort of come up in the last couple of years. One of them is what percent invested, how much risk are you going to take on? So the market school model has this sort of built in, but again, it's at 100% as a 5 and they're at a 7. So that's showing really big numbers. It's more detailed now. IBD's given us a percentage range. I think they're currently at 20 to 40%, but also saying, hey, it's okay to be a 0 given what we're seeing. This is just a guideline. Still got to make your own decision and do post analysis. At a minimum, you always should be able to answer the question, what percent are you invested right now? How much exposure do you have to the market? Second key indicator now is that new highs, new lows indicator. To be in a new bull market, we've got to have new highs exceeding new lows day after day after day. Need a good trend of that. 2 major proponents I know of that are using this indicator are John Boyk, you can follow him on Twitter, as well as Matt Caruso. So current market thoughts for me, this is not really the market I'm looking for. Any increased exposure, it better be on a nearly perfect entry on a nearly perfect Canslim stock. It's fine now not to have any exposure, and it's fine to not increase what exposure one might have until we get that trend to new highs on the NASDAQ and hopefully on the NYSE. And then we still need stocks set up in full and proper basis, Canslim stocks. So really need to focus and make our decision on what percent invested should I be right now and what is happening with the stocks that did set up and break out. So my current take on the market is it's whack-a-mole. Seems like you'll have 1 or 2 days, some group will do well, and then it just disappears and it goes to somewhere else. Like the solar group did good Friday. So we'll see how many days that lasts. It just seems like everything is getting hit that makes just a little bit of progress. It's like daily rotation, very frustrating. So what are potential catalysts for this market to get us out of this sideways chop fest? On the downside, meaning we get down further, dog days of summer volume are here. The summer's just tough. Decreased volume brings increased volatility and increased difficulty to make progress. The EPS season is wrapping up. It's going to be July 10th or so before that cranks up, and that can be a negative catalyst. We'll just have to see. Banking contagion continues. We saw it. PacWest got hit hard this week, and that can get worse. International tensions, conflicts, China, Taiwan, and more. The Fed, inflation, interest rates, you're familiar with. And then we apparently have a commercial real estate contagion coming, as many of these loans reset after 3 or 5 years, or they have a due date, they have to be refinanced, and all of a sudden the bank's not willing to loan as much and not at as an attractive rate as it was 3 years ago, basically free money. So problems coming there. At some point, the recession is going to become official. I actually hope that soon, because it's sort of like, okay, now maybe we can get somewhere and start making some progress on the upside. Potential upside catalyst, Fed ends rate increases. Maybe we're there, at least for a meeting. Looks like we're on pause. And then Fed actually cuts rate. What's the timing on that? Interesting divergence here. Powell clearly said not this year, and the market's pricing in 2 to 3 cuts by the end of the year. Somebody is really wrong. So we'll see where that ends up. Russia-Ukraine war maybe ends, and then election year coming up. The market looks 6 to 9 months ahead. So at some point, maybe it starts making some progress on looking ahead to an upcoming election date. So bottom line, we're just still stuck in study hall for now. So when the market gives us a timeout, we need to take advantage of that. When we're in study hall, then we need to study. So we always want to do the weekend work routine. This helps a lot on keeping up with the action of Canslim growth stocks. We use the Growth 250, use all the lists in the paper. Long term, I'm still super optimistic. Some point, I think we're going to have a great bull market. I just have no idea as to when that's going to start. Could be 2 weeks, 2 months, or could be the end of this year or longer. So we'll see. Just no way to know when that follow through day is going to be the one that we really wanted to be in on. So our Elite 8, this was a list I put together. I'm sorry, actually it was 2 weekends ago. I said, hey, if I just had to pick 8 now, sort of like what 8 do I think O'Neill would own or really want to own if he were in the market? So I called this the Elite 8 or the Dream Team. This is assuming the market's not bad and assuming I could enter the stocks properly and scale into full positions properly. Then what are the 8 that I would want to own right then, at least 2 weeks ago? And this list can change, or I can do a new one as time goes by. But it was what do I think are the best of the best in the Canslim universe. So let's see how this list is done in just 2 weeks. Remember, just a wish list. Many of these aren't actionable. Don't chase. It's better to miss than to chase. So let's hop back to Market Smith and shoot. Oh, there it is. Had to find my list. So here are the 8. Let's look at weekly charts. So good Canslim stock here. We've already mentioned it. Has been going up. There's no entry. If you're already in it, maybe it'll give us an add-on buy point if it gaps up on earnings this week on Tuesday. We'll just have to see. Shockwave Medical hanging in there. Big outside week last week, but did finish in the upper range. Strong Canslim earnings and sales. Lots of in or new on this one. Lantheus hanging in there. Not actionable, extended, but doing well. Axon, oops, got killed. Slammed below the 10-week. Would not make the Elite 8 list this week. So sprained an ankle. Back on the bench. PANW kind of got hit fighting back. Dexcom still setting up, got a 3 weeks tight in there. I think worth keeping an eye on. Mobileye, choppy stock, back under the 10-week line. And then Wing, hanging in there. Hasn't come back and broken back below the pivot or anything. So that was those 8. Go back over here. All right, we looked at those. And so finally, our monthly meeting is coming up this Tuesday, May 16th. That's at 7 p.m. Eastern Time. You can register for that at the Stockyard Meetup site. Tuition's $12 for the monthly meeting. You can attend live if you want to. You don't have to, but whoever signed up, everybody will get the recording, slide deck, and links to webinars, articles that come up during the meeting. And if you're a first timer, you've never attended a meeting, this will be a great one to attend, I think. And I will send you a courtesy copy of the prior month's meeting when I see you've signed up as a first timer. So the agenda for Tuesday, speaking of studying, this is going to be jam-packed, and there's going to be some things in here that are for attendees or people who registered for this meeting. I'm not putting this on the meetup site or really on Twitter either. And there's really 2 new things we're going to look at in detail. So here's the agenda. We're going to do the M Factor, Canslim teaching munchkins. We'll go over a Market Smith. There's at least one tip I want to go over with you. We'll see how Fryer did on its earnings quickly, but the 2 big topics. So I have a data list I keep of 7 years worth of IPOs sorted by years and some other categories. I'll tell you about those during the meeting. I try to go through that once a quarter and pull out what I think are, it's not a buy list, but it's a watch list, ones that could set up and become actionable possibly in the upcoming quarter or 3 months. So I'll try to do this quarterly. I've just put that list together recently, and I'm actually going to share that, and we're going to walk through that list. And then number 6, this is the one I'm kind of really excited about doing in particular, is getting to the next level in your investing journey. So Jim Ropel and Eve had shared with us the Ride the Wave plan, the template they and some other hedge fund managers fill out each weekend. I had shared that with you previously, but I've now taken that and adopted it into my routine and created a template tailored for my needs and the things I want to focus on. So we're going to walk through that. I'm going to share with you the one I filled out this weekend and show how this helps you during the week. And then following the meeting, I will give you the blank template with the questions. You'll just fill in the data, or you'll modify it where it works for you. So I think that's going to be very helpful. We'll see how it goes. We'll look at the group teaching portfolio. We'll look at the IPO market now. So we'll review one new one that actually is setting up and one fairly new one that is running hard, and you can figure out which one that is. So prior meetings are available to order. If you don't have a written set of sell rules, this is just a great time to really sit down and do that. I spent 3 whole meetings teaching that. It's very detailed. So those can be ordered. Prior meetings are $15 each. I did another one on a complete weekend routine, so I highly recommend that one. And I think the one we're doing this week will be one that's helpful too. So remember, the meetup websites are the Greenville Eastside IBD meetup group, the one I run with IBD, the Stockyard meetup site. You go to the Stockyard meetup site to sign up for the meeting. You can email me at this email address if you have questions or to order prior meetings, and I'll send you the list and how to do it. You can follow me on Twitter. That please do. And then videos, you're on my YouTube page now. So like and subscribe, and there's other videos on there that are helpful, hopefully, besides these weekend ones. So that's great. I know that everybody listening either is a mother or has a mother. So happy Mother's Day. Some of you just may have cursed because you forgot, but you have time to get flowers, make the phone calls. So take care of that. You guys have a great weekend review, and I look forward to hopefully seeing a lot of you on Tuesday evening. That's it. I'm out of here.